clicky keyboard for sure. Hey, welcome to the Home Buyer Seminar. I'm Bill Gross, at Bill Gross Probate and Social Media, along with my good friends. Let's see, up there is
Patricia Castillo.
and she's in a car with a fancy background. Looks like she's in a luxury home, but she's really not. And then our other good friend,
Shannon the Lender.
we moved him around because he's a little lower because he's got the Home Buyer Seminar flag over his head. But hey, new tech. We're just trying to upgrade everything here and do a lot better. I mean, I think that's the nature of this market today. But we got to do better, work harder, do more. What's going on in the marketplace? Let's start with Patricia. What's new? What's happening? What's going on?
That's right. We do have to work harder, and especially with listings, it takes a lot to get a home sold right now. It's not just about putting a sign in the yard, but definitely sharpening up our skills to get these properties sold. Negotiating terms. I was showing luxury homes this weekend, and a couple of the properties that I wanted to see or show to my client, the listing agent said, "Oh, we haven't changed the status on the MLS, but we just accepted an offer." And even the luxury homes, our buyers are sometimes not performing. So I got a call on a couple of properties on Monday from the agents asking if I wanted to go and show the property because the buyers didn't even set their deposit into escrow. So it happens with all types of properties where that's what I'm seeing a lot right now, where buyers are not performing. And I actually had that happen on one of my listings recently where we accepted an offer and the buyer never sent the money into escrow. So
Wow.
yeah, so I'm seeing that. I've seen that quite a bit this past week, and but I still see that there's quite a bit of buyer demand for sure. A little bit more inventory on the market, but still very, very high demand with buyers. In fact, I just sent a referral over to Shannon this morning, and it was a buyer that found me online, wanted to get pre-qualified, and has the down payment set already, just needs to know what her purchasing power is. So Shannon's connected with her. But yeah, I think as we're getting more into spring and the weather's changing, people are definitely out looking at property and very curious to see what they can qualify for and what they can buy.
Yeah, I feel everything I have gone into escrow. We put into escrow something I thought was a great price on a new probate listing, and it had barely been in the market for about 10 days, and then we got several backup offers, higher prices, by over $100,000 more than we accepted. I mean, just crazy, because there's so little inventory. And now in my case, these are in Tarzana. And I asked the agent, what's going on? And she said that she and her buyer both had lost their homes in Palisades. And she said, we've been renting for a few months, and it looks like we'll be renting for 6 months or 9 months, and neither of us don't like it. And I said, and I know he said, I don't care. I don't give an F. I want to buy a property. And if I have to pay more, let's just do it. And I think that those Palisades homes burning, and I guessed the Acton homes to a lesser extent, are going to have a big impact on the market because there are, let's say half those people, they want to stay around, and if they get paid off insurance, they're going to buy a house and they want a place to live. And there's not that many more houses being built in the year. Right. So, while you can make a lot of stories about the economy in LA not being all that good, the reality is that there's not extra houses and houses burn down, and it's like musical chairs. They want to sit in a chair somewhere. And I think that maybe overall, you could say it's not a great market for buyers, but for the buyers who want to buy, wow, crazy. At least that's what I'm seeing. I don't know. Shannon, what are you seeing?
Yeah, I mean, I'm seeing a lot of more interest right now. People are I don't know if it's because of the season. People are, wanting to get qualified, wanting to see what their purchasing power is. Mm-hmm. But again, people need to get their ducks in a row. I'm seeing, a lot of car payments, student loans, things like this, jobs, people in and out of jobs and things like that. So like Patricia was saying, I think the buyers that have all their ducks in a row are going to do well. And the ones that don't, there's no room for error in this market right now. It's either, hey, you perform and you're good to go, or if you don't, like Patricia said, now they're getting hit to the curb. A lot of people are not having a lot of patience for those buyers that, again, don't have everything lined up. And that's what I'm seeing right now. So, yeah.
Right.
Really a two-tier economy. I don't think there's any way around that, is that there are the haves and have-nots to some degree. And if you happen to be able to buy a house now,
Do it.
do it. And it's interesting. Rates, there's been a lot of news about the tariffs, a lot of news as a result about the stock market going up, down, up, down. You might say, well, what difference does it make? Well, at the same time, stock market goes up and down, so do mortgage rates. And so we had rates, as low as, I think, 6.6 and as high as today is 6.9. A wild ride. And that's going to, could change things for some buyers, obviously. So, Shannon, has that affected you as far as rates, or are even buyers even aware they've moved back up as a result of all this?
No, that's the thing. I mean, the trend the last few weeks since the stock market was going down is rates were going down, actually. So that was a good news. But then today, like I said, it's a wild ride, so what was true yesterday is not true today.
Yeah.
And, unfortunately or unfortunately. So right now the sentiment has been, hey, rates are going down. Since, the 10-year treasury kind of improved a little bit, so did mortgage rates. But as of today, they spiked up again. So yes, we are definitely in a volatile market. But definitely. But then again, there's opportunity in volatility. That is the one good thing, is there is opportunity. So it just depends on people's sentiment. I am seeing a lot more people wanting to get into real estate because maybe their portfolios are not doing as well. They want their money somewhere else. So I am seeing some of that. I'm seeing some refis pop up too. People wanting to get that cash for whatever reason. People wanting to see, hey, can I get that cash at a decent rate now? So I am seeing some refis boom as well. And then obviously the new, I'm getting a lot of inquiries about that new CalHFA program where they'll help you with your down payment and closing costs. They give you like a 2.5% of your closing costs. So that one I'm getting a couple inquiries about as well. So I might do a Zoom class on that.
Can you talk a little bit more about that, Shannon, as far as what the parameters are, what the purchase price for LA County, let's say, because that's primarily where our market is at, and what the maximum is for the down payment assistance, and maybe minimum and minimum FICO scores needed?
Yeah, so this is a brand new program. I'm actually going to be doing a Zoom class on it in the next 2 weeks. But pretty much CalHFA has a program that, if you're FHA and even conventional too, they'll give you that 3.5% as the down payment assistance. It's a silent second, right? So it's not a grant, but it's a silent second. And now they came out with a new program that'll give you 2.5% for your closing costs, or you can put that as an additional to your down payment. Now, the requirements are, I think it has the 660 FICO score. Ideally, you want to be around 680 to 700. That's one. Number two, you do have to have a 2-year work history. You also need to be a first-time home buyer as well. You can't have a property on your name or on your credit score and another mortgage on your credit score. So you have to be a first-time home buyer. And after that, I mean, pretty much it's just like a regular FHA or conventional loan at that point. Now, there are income limits. I believe in LA County, don't quote me on this, I think it's just under 200,000. It's like 198. So
combined household income?
Yeah, combined household income 198 in LA County. It obviously changes per county, but yeah, you can't make more than that. If you make more than that, then you kind of reach that limit and you don't qualify. So there's an income limit. You have to have a decent FICO score. Again, ideally around 680 or higher. 2-year work history. They want to see that. And then I did mention also you have to be a first-time home buyer. Now, some people ask, hey, do I need to be the first-generation home buyer? Which I know that the Dream for All program had that. In this case, no. If your parents have a home, that's fine. I've even seen people utilize CalHFA, and they've had a home, but they sold it. I think the timeline is around 3 years, 3 to 4 years, and then you're considered a first-time home buyer at that point. So with this program, you can essentially go in almost at 0% down, if you have that 2.5% closing costs to help you out. But the caveat is the rate is a little higher. So if you go to CalHFA on their website, they post their rates daily. So that's the interest rate for the entire loan. And then the down payment assistance is a silent second. You don't pay for that every month. You just pay when you cash out, refinance, or sell the property. So that's
right. So you're not making payments on that silent second.
Exactly.
Until you have paid out the first mortgage, or you refied, or you sold the property.
Yeah, I think you could still refi to lower your rate, but if you cash out or touch that equity, then they're going to need their money back first.
Right.
That's
what I've noticed with some of the. I mean, there's no free lunch, as it's been said, right? So there's going to be a trade-off somewhere, and as a home buyer, that's where we would guide you in that process to help you, help give you all the information so you can make the best informed decision. But home buyer grants, those are available. You don't have to repay them back. They're offered by different cities and lenders, but the rate is higher. It's about 7%, maybe 7.25%. If you're looking at the CalHAFA that Shannon just mentioned, you can borrow the closing costs up to 2.5%, but like he just said, the rate is going to be a little higher. So if you're getting an FHA loan, your rate's going to be almost a whole percentage lower, which is going to lower your your monthly payment. So we have to see where you're at in terms of the monthly payment. If maybe an FHA loan is going to be most suitable for you because your monthly payment will be less, or are you going to benefit from a home buyer grant or CalHAFA financing and having that silent second with a higher rate on your first loan?
Yeah. But there are options out there for you if down payment is even. It's funny. Majority of the people that are in CalHAFA, I notice they have money. They just utilize these programs. Right. So you'd be surprised. A lot of people that utilize these down payment assistance programs still have money, which is smart. They just, hey, we're going to use someone else's money, which goes back to what I always say before. Do not go into a home with nothing in your bank account. That is not a smart financial decision. I don't advocate for that. If you're looking at down payment assistance because you have zero money in the bank account, again, I don't recommend that, right? Have some money in the bank because, again, you finance this house. And when you finance this house, there's things you got to fix. There's supplemental tax, your supplemental tax bill that comes up. There's expenses. And not for nothing, you should have at least a few months of mortgage payments in the bank at the very least. So, I'm off the soapbox about that one. But definitely take advantage of it. I'm seeing a lot of people, they definitely do take advantage of that program. Again, even if they have the money, they're just like, I'm going to use the state's money, which is totally fine. And the good thing about that is you're not confined by one city. Because yes, there are grants out there, and ask us about those grants. The only thing is you're tied to that city. If you're married to that city, that's great. But with the CalHAFA, it's all of California, which is good.
Right, more flexibility in terms of selecting the property.
Yeah, and then they're easier to work with. A lot of these cities, it's a little longer of a process. They don't get back to you right away. CalHAFA is a little more streamlined. It does take, I would say it's still 30-day escrow. I can still get it done in 30 days. But the city ones, it's more like 45 just because you're having to, talk to two underwriters, which you do on CalHAFA, but CalHAFA with our bank, they work very fast and very cohesively together. So. And the next thing, too, I want to mention, I'm not sure if we mentioned on the other one, did we bring up the whole I-10 FHA situation in our last meeting?
No.
Yes. Well, I'm not sure how much of this is affecting your buyers or anything like that, but with this new administration, I think as of effectively May 24th, if you are a non-permanent resident, you're not going to be able to qualify for an FHA loan, unfortunately. So if you if you're working with someone who is a non-permanent resident and is an FHA, you have to be in escrow before the 24th of May. So, and after that,
the pressure is on.
Yeah, for sure.
I have a podcast on real estate, and I kind of address some of these issues. And there's two sides of this. One is, if the buyer is your friend, neighbor, or customer, you want them to get the loan. If you're a taxpayer, you may or may not want money to go to legal aliens or permanent residents of our country. That's a political question. What's amazing as you start digging in, I don't think people knew how many of these were being done. I also don't think I had some video on my podcast about a tour through the FHA headquarters building and how few people work there, how the building's been leaking for 10 years and they haven't fixed it. Wow. Like these programs, I think as taxpayers, sometimes we assume these programs are being run to, be of service to the taxpayers, then you find not. And I think this is one of those cases where, if you're not a resident alien or a citizen, it's disappointing that you don't have access to the program. As a taxpayer, I would say I'd like to see more of the money go to American citizens and resident aliens, and permanent residents, so that we can get houses or they can get houses. And so, these are tough questions, and it's always difficult when it's your neighbor, your friend, your family member. I have a business where we have a employee, and on one hand, I'm probably a little more hardcore on immigration issues. On the other hand, when it's somebody you know and value, it's a little harder to be hardcore because now it's a real person. It's not just some policy. So this is one of those where, I can certainly see both sides of the issue. And I think, again, if you're not a permanent green card holder, permanent resident of the United States, and you got involved in the I-10 mortgage program, get it closed before May 24th. Take advantage of it. It's legal up until May 24th, and it's not illegal, and you're not going to suffer any penalties for it. Just know that after that, it's not available to you.
Yeah.
Unless you become a green card holder or become a citizen, then, by all means, have it.
Yeah, please do. Yeah, I think they can still go conventional too. That's another thing too. Just FHA, and what FHA essentially stands for is the bank is securing that loan. They're not necessarily funding the whole deal, right? There is an upfront, fee for FHA, but they're not funding the whole deal. The bank's still funding it, but the government's pretty much insuring it.
Right.
They're still on it. So, are you guys seeing right now that the buyer pool is shrinking? Have you seen any of these news affecting the buyer pool at all?
My Spanish isn't that good, so I can't say that. I aspire to. I really try, but my Spanish is just not good enough to deal with that. And look, there's all kinds of people from all around the world. I think that's an unfair comment. There's people, LA. We have people from everywhere. My swim coach is from Slovenia, and she's got some immigration issues, and so we have people from all over the place. And it's just not a simple question. As some people are good, some are bad. A lot of people have complex issues. But as far as the buyer pool, I don't think the low income immigrants coming here without a credit history, without income, that were getting some of these loans, those people aren't coming here in the same numbers they were obviously a year ago. Wealthier people who come here on student visas and other visas and overstay them, they're still here. As long as they don't commit crimes, they're going to be here and they're going to still get those loans and still find some way to be part of the buyer pool. But here in LA, I think the bigger issue is we got a lot of people who've been displaced from houses or looking for houses. I just keep hearing that story over and over again.
That's right. Everybody needs a place to live, so.
I'm not in the area that was burned. I live, comfortably 15 to 30 minutes away. I'm close enough to where those people want to move in my neighborhood, right? Because there aren't a lot of options, and so we're before we'd be too far for them. Now we're considered options for those people.
And for the first-time home buyers, are you guys seeing any flexibility on prices right now, even with all these tariffs and stuff going on, or prices still going up?
Concessions.
Yeah, a lot of seller concessions. You want to explain to people what are seller concessions and?
Sure. So concessions would be the seller paying for the buyer's broker fee, right, during the representation and escrow. Also, any credits for closing costs. So if your agent is writing up the offer for you, then in the offer, your agent would indicate how much of a credit is being asked, or requested, I should say, for the seller to pay. That would be a concession. If they're asking for $5,000, or usually I see $10,000 as a kind of an industry norm, then that would be a concession. That would be something that would be negotiated during the offer. I've had agents call me and say, is your seller going to pay a agent's, buyer broker fee? Is your seller willing to help with closing costs because my buyer is maxed out at the loan approval amount and they're not going to have any money for closing costs? I literally had a conversation last week from two different agents that said, if we write the offer at this price, can we negotiate any kind of concession to assist the buyer with closing costs? So it's definitely a topic of discussion recently on one of my listings, and buyers are definitely out there trying to get into a home and finding ways to do it. So yes, I've seen concessions.
Yeah, and I would definitely tell people, and I know I went back to that whole situation about not having any money, but also there's the other side too of people think that they don't have enough. And I would really encourage people, don't have that mindset, because like great agents like Patricia, if let's say you have just enough money for the down payment, that's fine. You have an agent that can negotiate some of those closing costs. So that's definitely an encouraging thing is, hey, if you need some of that credit, you can negotiate it,
Right.
don't let that be something that holds you up, right? Especially if you have a good FICO score, and maybe Patricia, you could talk to this too. If you have a good FICO score, your income is strong, and maybe just the last pillar is you just need a little bit of help financially on the closing costs. Exactly. It could help. It could definitely help.
I would say get in the deal and then figure it out. Get in the deal. You have a buyer. If you have a pre-approval letter and you get into contract, don't force the concession discussion before you're under contract. Get under contract, and then you can negotiate at that point.
Okay.
Obviously, if rates go up, you have a good case to ask for concessions to cover the costs for buying down the mortgage. If rates go down, you've saved some money, and maybe that makes it easier for you. And at that time, you still can ask for concessions. So I always tell people, get in a contract and then have your negotiations. Don't get too caught up in it beforehand, or else you're going to get bogged down and missing out.
Yeah, well, that's actually a good point. That's a really good point. So as tax season starts wrapping up, for sure, for all the also all the self-employed people out there, make sure you talk to a lender first before you seal those taxes, because I've seen people wanting to get qualified, they write off a lot. And then
I'm one of those. I'm one of those. I had a year where I had a lot of commissions push into this year from last year, and so my taxes are really low. Meanwhile, I'm closing escrow on a property in July, so I have to look at those numbers I'm watching and saying, what do I do? And so I'd rather not pay extra taxes and keep that money in the bank than use that. But still, you have to watch that. You have to at least know what's going to happen, so you're not surprised.
Which, hey, you know what? I have clients, and I'll end with this. I have a clients that are business owners, and hey, we look at both options. Do I, claim more of my taxes, or do I doing what I'm doing, just put more down payment? Because maybe FHA conventional you can't do, but as business owners, there are programs that'll go based on your profit and loss, bank statements, right? Things of that nature. You have to put a little bit more down, but hey, you just put that money towards equity instead of giving it to Uncle Sam. So,
That's exactly what I'm doing. In my case, it's a flip. It's not I thought about possibly financing, permanent financing, and maybe making it a rental, or maybe living there for a year or two, even though it's not really where I want to live. It's maybe close. Is it close enough? That was an option that we looked at, and quite frankly, with the taxes, I had to make a decision. And now I don't have to file till October, but the lender's going to ask for P&L. You can't really get around it too much. Yeah. So in this case, but there's hard money lending for a flip, so that's an option I have.
Yeah, hard money is good. And the good thing about hard money is they ask very little questions. You have the credit, you have the experience, the down payment.
Yeah, they went the cash, they went the equity in the property. So
exactly.
So, Patricia, do any open houses that people can find you at, or anyway, if they want somewhere, Patricia Castillo, how do people get a hold of that?
Sure. My cell number is the best way, 323-365-9909.
Second best is the IG. You're on the IG all the time now. I see you touring this house, that house. You had a restaurant review, I think. It seems like I'm watching Patricia Castillo television when I go on IG. I only go on IG because my daughter posts pictures of my grandkids, and so I only see my grandkids or you with a new post, FYI.
Thank you. Yes, yeah. I like to highlight a lot of the small businesses, so I do a lot of the community posts, and when I'm out and about, places that I frequent, new places that I've been to, and nice. And also the home tours. So yeah.
We should get an IG Fun with Patricia Castillo.
That's a good one, yeah.
And no comment regarding Shannon. Shannon, and you, how can somebody find more of you if they want to get in touch with you or talk about lending or qualifying?
Yeah, they can reach out to my cell, area code 661-317-8484, or like you said, my Instagram, FUND Fund with Shannon. If you have any questions on how to get qualified, what the process is, how to access down payment assistance programs, or just in general, hey, what is it going to look like if I were to buy? I have some people calling me about just scenarios. Hey, what if I did this? What if I did that? Just give me some ballparks. Totally fine. We can definitely have that conversation. At least get the process started, get you going.
Fantastic. And I'm Bill Gross, at Bill Gross Probate and social media. And thank you guys for watching this. If you have questions, comments, or you want to talk about a certain topic, put a comment in. Please subscribe, like this. I'm at Bill Gross Probate and social media. We put a new issue out every Friday morning. And make it a great week, guys. Thank you so much.